Hello, I'm Ron with Equity Builders. Equity Builders provides debt solutions nationwide for homeowners who currently owe more on their homes than their homes are worth. If that sounds like you, or you know somebody like that, and you'd like to just be able to help out, then you've come to the right place. You see, our vision is to provide the American homeowner the opportunity to recover the lost equity in their home through our principal reduction program. Folks, there's millions of families right now with negative equity and mortgage delinquencies all across America. Families are losing their homes at record rates, and the experts are predicting higher numbers for the years to come. Things aren't getting better anytime soon for the homeowners. According to Financial Post, almost one-third of U.S. homeowners who bought in the past 5 years now owe more on their mortgages than their properties are worth. Second quarter home prices fell 9.9% from a year earlier, giving 29% of homeowners negative equity. For those who bought at the 2006 peak of the housing market, 45% are now underwater. Negative equity and declining prices are making it difficult for homeowners to sell property for a profit. Almost one-quarter of U.S. homes sold in the past year were sold for a loss. That contributes to the foreclosure rate because some homeowners just can't absorb the loss and end up surrendering their homes back to the banks that will hold their mortgages. And what I want to talk to you about is a multi-billion-dollar hedge fund which is creating opportunity for homeowners all across the country right now. You see, like flies to a moth, or like moths to a flame, investors these days are forming around what some believe could be the biggest distressed debt sale market since the days of the savings and loan crisis. Banks are selling troubled loans on land and residential construction debt at a faster pace as prices plummet. These are known as the toxic assets on the bank's balance sheets. Banks have taken to selling these debts to special investment funds, which take it upon themselves to reclaim the debt. As much as $5.2 billion of this type of debt has already been sold off, which is becoming part of an increasingly popular procedure exercised by banks to dispose of these troubled loans. These special investment funds, which are purchasing them, are known as hedge funds. So what is a hedge fund and why is it important to our program? Well, a hedge fund is an investment fund open to a limited range of investors that is permitted by regulators to undertake a wide range of investments and trading activities, more than most investment funds can. Well, through our program, we have a $50 billion hedge fund backing us, and we're offering the lender a way to get those toxic assets off their books without having to go through the foreclosure process and risk being even further in the hole. Now, why the lenders don't want the real estate-owned properties. From this point forward in the presentation, we're going to refer to it as REO. Well, as the homeowners can no longer afford to maintain the property's condition severely deteriorates. Lenders face strict regulations from the federal government regarding the ratio of bad loans and the amount of liquid reserves to the balance of their non-performing assets. The lender is in business to make a profit by lending money in the form of notes secured by real estate, and the lender will continue to lose interest, incur attorney's fees, trustees' fees, holding costs, maintenance fees, fix-up costs, and subsequent real estate commissions, and many other fees that could apply to a foreclosure. Will the lender come out ahead with its REO property? Again, no. After all the time, effort, and cost, the lender will usually take a serious loss. Below is an example of a typical REO scenario, and here's what some of the numbers might look like. If you start off with a property that you owe $288,000 on, by the time you add the other cost, you're looking at about $320,280 that a mortgage company would have to get at a sale. Well, if they sold it for $225,000, which would be a fair market price on that property, that means the mortgage company would lose over $95,000 on that one property. The key to why this works for us is very simple. We don't approach the bank's loss mitigation, collections, or even the customer service department of the bank. We approach their asset or wealth management departments. Now, the only thing that the wealth and asset management departments are interested in is that ultimately what impacts their bottom line. They don't want to lose any money on any transactions. So what we show them is how they can make 10 to 15% more by liquidating the notes at a discount than they would make going through a short sale or going through the expensive process of foreclosing on the home. Now, folks, at no time will we ever take ownership of your home. We only buy the note and the servicing rights to it. So who qualifies? Well, you have to have at least a 50% debt-to-income ratio. You do not have to qualify for your debt-to-income ratio on your own, however. You could use a spouse, a relative, a roommate, anybody living in the home or not even living in the home that wouldn't mind going on title with you. You have to be at least 25% upside down in the property, and you must be able to prove any income that you state to us. With our program, 12 months bank statements, we'll consider that as proof of income. Now, I'm sure you're sitting there realizing there's a lot of benefits to this program, but let's just talk about a few of them. First off, you got the reduction of principal balance to 90% of the current market value. Every one of our clients goes into a 30-year fixed loan. And if you're a performing loan client with A-plus credit, you can get as low as 5% interest. Monthly mortgage payments can be reduced 25 to 50% or even more in some cases. You don't need a credit score to qualify. And folks, you come out of this program with an instant 10% equity. It only takes about 60 to 180 days to turn it around for you, and you never lose title or ownership of your home. This is not a lease option program, folks, where we buy the property and lease it back to you. And there is no tax or credit repercussions for going through the program. Here's an example. If you owed on your first mortgage currently $350,000 and then you had a second for another $50,000, that'd be $400,000 that you own that property with a payment of around $2,849. Now, if your current market value is only $250,000, we're going to put you in the home at $225,000 for a new payment of $1,535. Folks, that's an instant $1,314 of monthly savings. And we eliminated $175,000 in negative equity. So what's in it for you? Well, in this scenario, you would save $15,700 a year put back in your pocket of after-tax dollars. What's it take to get started? There's going to be an agreement, a borrower's authorization, a statement of information sheet, and a client information worksheet. What are the required documentations we'd be looking for from you? It'd be mortgage statements on your first and second, income documentation such as 30 days pay stubs, last year's W-2s, 1099s. Every one of our clients will need a hardship letter, but we'll walk you through the criteria of that letter. Hazardous insurance declaration page, copy of your driver's license, all correspondence letters from your lender, notice of default if you have one. Now, folks, this is very important. If you have notice of trustee sale, we need to move on this quickly to help save your home. Any loan modification documentation, so if you're going through a loan mod right now, we need to know about it. And then your property tax statement. What's the program cost to get involved? It's only $1,595, and that's all-inclusive, folks. There's 3 appraisals. The first appraisal will be an exterior appraisal known as a drive-by. The second appraisal will be an interior and exterior appraisal done after we secure the servicing rights to your note. And then the third appraisal will be done right before the investor files. It also includes your credit report, all your processing and underwriting, and all the title and escrow work. Folks, there's no closing cost to you on this loan. Let's go through just a couple of the most common questions. Do I have to be current on my home? No, you do not. We can still help you if you're behind. Do I have to have good credit? Again, no, you don't. We'll work with anyone regardless of their pay history or credit score. Can you help if I'm in foreclosure? Most definitely, but again, you need to call us right away. Will this have a negative effect on my credit? No, it won't. And can I have more than one mortgage entered into the program? Absolutely. I have a jumbo loan. Can you still help me? Yes, we will consider jumbo loans, and we can also do FHA loans. Can you help me if I'm in bankruptcy? Absolutely. But get us hold of us soon. There's a few extra steps we have to take. What will my new loan look like after everything is finished? Well, the new loan balance will be based at 90% of the current market value. What will my interest rate look like? Your interest rate will be determined on whether you're a non-performing borrower or a performing borrower, which means are you making your payments or are you currently not making your payments? All performing borrowers who qualify for traditional financing will be refinanced with the current market interest rates. All non-performing borrowers will receive interest rates as follows. 700 scores or better gets prime plus 3, and 699 and below for credit score is prime plus 4. Folks, that's still a 7.25% interest rate as our worst case scenario currently. So what's next? Contact us so we can help you. But first, get a hold of the person who invited you to this presentation so they can answer any further questions you may have and help you get in contact with us. Or simply send us an email to admin@equitybuildersna.com. Folks, I want to thank you for coming out to our presentation today. And whichever direction you choose to go, I wish you the best of luck. Have a great day, and thank you for your time.